Hi, I'm Rick Pizziano. I head up the Eastern region for the institutional client group at Allspring Global Investments. Welcome to Spring Talk. Today I'm with my colleague, Prashant Parada, who is a portfolio manager for the Allspring Intrinsic Emerging Market Equity team. Prashant, thank you for joining us today.
Thank you for having me, Rick.
So emerging markets have been in a prolonged period of underperformance, especially versus US equities. However, over the last 18 months, emerging markets have actually outperformed. What we're hearing from a lot of global investors, particularly on the institutional side, is that they're looking to diversify away from the US assets and equity markets. So as an emerging market portfolio manager, what are some of your thoughts with respect to US versus non-US?
Sure. And I think the tailwinds are all moving towards emerging markets, and we expect further growth from here on. I think if you look from a valuation perspective, EM trades at a much cheaper valuation and gives you faster earnings growth. Not only that, there's structural tailwinds, which are from AI and a China plus one supply chain capex story. And there's potentially weaker dollar going to happen in the future. So we think all of these are catalysts which set the stage for EM asset class and particularly small cap to outperform in the future.
Yeah, that's some really good points there. So the case for EM small cap has been compelling for many years. What makes this current environment particularly compelling?
I think now, specifically, if you look at the way supply chains are moving, especially if you look at the hyperscalers in US, they've all gone from cash flowing companies to high capex companies. And you have to understand where the money is flowing. So the money is flowing from these hyperscalers to TSMC, to microns, and further downstream in the supply chain. We think AI is a very powerful technology. It's for here, and it will be with us for a long period of time. And we think these tailwinds especially favor our asset class.
So we talked about the theme of diversifying away from the US. So clearly a big theme going on in the marketplace. And then you just hit on the other one, AI. You can't see a headline, you can't go to a conference, you can't go anywhere with someone mentioning something about AI. But investors are thinking about AI spending versus AI beneficiaries. They're thinking about, the concentration risk that AI is creating within market indices. There's going to be winners and there's going to be losers. How do you think about that as it relates to, again, emerging markets and then particularly emerging markets small cap?
Sure. And if you look at the ecosystem of supply chain, most of the beneficiaries lie in Taiwan and South Korea. They're supplying to your TSMCs of the world and data centers that are being rebuilt in this new industrial revolution. But outside of that, there's some countries that might go through some headwinds as well. For example, IT services is a big component of India's GDP. But however, for the small cap asset class, it's not a big issue because most of these companies are large cap in nature. While most of the companies we see in the small cap in India are actually seeing accelerated earnings growth. So from that point of view, we think there'll be winners and losers, but the small cap asset class stands to gain out. In terms of concentration risk that you mentioned, if you look at the top 10 names in the EM index, roughly 40% of the larger index is just top 10 names. Versus if you look at the small cap, the top 10 names is roughly 6% now. So if you're looking at that from a diversity perspective, you need to broaden your exposure, which small cap provides.
So we talked about a couple trends, but beyond AI and beyond kind of diversifying away from the US, what are some of the bigger secular growth trends that you're seeing within the emerging markets? And again, specifically within the small cap universe?
Sure. One big trend that we see is the financial services inclusion. If you look at mortgage penetration rates in countries like India, it's only 12%, while in US it's almost 5 times as much. So there's definitely room for
Mm,
to go. One thing we realize is as these countries move up, sort of from low income to medium income countries, there's an S curve that you can participate in. For example, air conditioners. Once you move up a certain price point in income levels, you get the first air conditioner in the house, and a few years later, you have four air conditioners in all your rooms. So the small caps play into that theme. So there's an S curve, whether it's with smartphones, air conditioners that you can participate in. There are also better corporate governance opportunities that you see with regards to small cap as well. A lot of the countries, such as in Korea, there's a value up program that they're happily want their companies to do more shareholder dividend buybacks. And, before they used to hoard cash,
mhm.
which will result in low ROEs. But now they're actively participating in better capital allocation. So we think there are a lot of separate themes apart from AI.
Mhm.
And the interesting thing is these separate themes are a bigger weight in the small cap than they are in the larger cap index.
All right, so moving off of AI and some of the bigger secular growth themes, when you're investing in the emerging markets, you have to think about China, right? And investors are really, taking the China decision very differently. Some are going ex-China, some are actually doubling down on China. As you think about emerging markets, small cap, how do you think about China?
Yes, China is actually half the weight in the EM small cap index versus the large cap. So in the large cap index, it's roughly 19 odd percent. In the small cap, it's 8 and change. Um, and the India weight flips as well. The India weight in the large cap index is roughly 11%, but in the small cap is roughly 20. So a lot of investors and allocators that we speak to, uh, they feel very positively about this. They say this is exactly the allocation we want, and small cap offers less of China headwinds, so they would allocate more to the asset class in the future.
Interesting. So you get more diversification at the name level, and then more diversification at the country level as well.
Yes.
Okay, switching gears a little bit. So emerging markets, it's a high return, high risk asset class. It's an inefficient asset class. Active managers have done quite well there. What are your thoughts there?
Yes, if you have to allocate to E and small cap, you have to go active. And one of the key reasons for that is if you look at the average analyst coverage across our universe, and with the small cap, there are 1,800 plus names, the analyst coverage is 40% less versus the large cap index, the MSCI EM index, and it's 25% less than the S&P 500. There's several names in our universe that have little or no coverage. And as the research budgets of sell side firms evolve, the first thing they actually do is they cut small cap
Mhm.
coverage. So we think the opportunity set to outperform actually is widening in the future.
Interesting. So less coverage could also mean more risk potentially. And so as you think about risk, and obviously it's emerging markets, so it's a very volatile asset class. And some of these companies, to your point, are not being covered. How do you sift through the universe of companies of thousands of securities in the index and differentiate the high quality companies, so the durable businesses that will be around in 5, 7, 10 years time versus the more speculative companies that could go out of business?
Yes. The central thesis of our philosophy is that not all small caps are equal. In any country or industry, there's a small minority of companies that create and generate most of the value. We aspire to find these companies. So the way we go about it is distill the universe into a quality pool of 300 odd names. And what do we mean by quality? The first thing we look for is capable management teams with high inside ownership. We are When we speak to a company management, we are trying to figure out whether they aspire to do more. We're interested in small caps that will become mid and large caps. Um, so the aspiration level should be high. You should understand that it's very hard being a small cap company in emerging markets. These entrepreneurs are really fighting against the grain.
Mhm.
And a lot of them put their heart and soul in building these businesses. The second thing we look for is if there are any cross holdings. So typically we find that families control 60, 70% of the float of the business. Sometimes they have one good business and three bad businesses, and they lever up the bad businesses and use the good businesses collateral. We tend to avoid such situations. Charlie Munger once said that he invests in companies that are high quality that any idiot would run. We look the opposite way.
Mhm.
We want to avoid the idiots because bad management can destroy a company in ways that's hard for minority investors to fathom. Um, Beyond looking at the management team, we also look at how big this business can become in 5, 10, 15 years. Uh, this has helped us identify opportunities, whether it's e-commerce companies in Brazil, beauty companies in Korea, or a financial services company in India for the benefit of our investors. With EM small caps, the game that we are playing, quality plus valuation, is not necessarily played by other investors in the world. When we are investing against local investors and local shareholders as well. And what we do find when we listen to the earnings calls transcripts by the questions they ask, they're often looking to hit the next home run. So they are very careful about whether the company will beat or miss earnings in the next quarter. When the company misses, they indiscriminately sell. That allows us to pick up opportunities that are cyclically depressed but structurally sound. And the reason this exists is because we're playing a different game. We're trying to hit singles and doubles while they're trying to hit home runs on every pitch. That means they have a higher strikeout rate, and that gives us opportunity to patiently allocate our capital.
Interesting. Switching gears just a little bit. So let's pretend that you're sitting across from an investment committee member, and they're considering making a first-time dedicated EM small cap allocation. What's the single strongest argument you can make to help them feel comfortable about doing so?
Sure. If you look at the investment universe, only 2.5% of the capital in equities is allocated to EM small caps. We think this is a big mistake. First, if you look at the median manager, he's outperforming by roughly 300 basis points on a 1, 3, 5, 10-year basis in the small cap universe. This is much higher than what the median manager does in the larger cap indices. Second, the large cap index is becoming very concentrated. We mentioned the top 10 names are now 40% of the index. This makes it much harder for the active managers in that index to outperform. We think concentration is a double-edged sword. You might need it to generate wealth, but you need to diversify to preserve wealth. Uh, a wise man once said that, then this is Sir John Templeton, he said that the only people who do not need to diversify are the people who are right 100% of the time. So we believe allocators will benefit just not by the diversification, but third, the question comes is like, why is there, using these 2 points, why is there only 2.5% of your assets allocated to this asset class? Surely the asset class must have done poorly compared to the larger EM index. And the answer to that is also no. So if you look at the rolling 5 years, roll monthly over the last 25 years, EM small cap index has outperformed the EM larger index 73% of the time. So we believe by under allocating to EM small cap, investors are not even losing the alpha opportunity, but also losing the total return opportunity.
So, last question or serious question. And I think you touched on a lot of these things throughout your comments. So maybe just kind of bringing it all home. Looking out 5 years, what needs to happen in order for emerging market small cap companies to outperform their global equity counterparts?
Well, some of the things we already touched on, it's faster earnings growth. We already know the valuations are much lower. The structural tailwinds, such as AI and China plus one, we think these are decade-long stories, and these will continue as well. There's a potential for weaker dollar, which will be a tailwind for the asset class as well, and better corporate governance, which we think is also here to stay because governments are getting involved as well.
Great. Okay, so I said last serious question. Let's have a little fun. We'll do a little rapid fire.
Sure.
So you travel a lot to the emerging markets. So a few questions in relation to your travel. Most beautiful city you've ever been to?
Rio de Janeiro, by far. I think it has everything you want: lush rainforest, mountains, and beautiful beaches.
Favorite restaurant?
Hands down, it has to be Bukhara in New Delhi. This is my favorite Indian restaurant. The key is if you ever eat there, there's cutlery, but it's better to eat by hand, and that's what heads of states do as
Okay,
well.
interesting.
And my favorite dishes there are lamb, chicken, and dal. The dal they actually simmer for like 18 hours
Wow,
for this.
sounds delicious. Something interesting from a recent trip.
Sure. And this was while I was shopping for my daughter and my wife at a beauty store, Olive Young in South Korea, and interacting with Gen Z because I didn't know about all the new brands, and they were helping educate me of what's trending and what's not. And that made me realize that South Korea is really the epicenter of the beauty revolution in the world. And coming back and looking at Sephora and Ulta, they have a lot of catching up to do.
Be sure to mention it to my wife and my daughter. Prashant, thank you very much for your insights today.
Thank you for having me, Rick.
And to our audience, thank you for joining Spring Talk.